Can you guys hear me?
Testing.
Nice to be here. Appreciate you guys coming out. Maybe we can start with introductions. TJ, do you mind starting and introduce yourself?
Yeah, sure. So I'm TJ. I'm the co-founder and CDO at Everyrealm. We're a holding company that invests and develops social video games in virtual worlds.
I'm Carlos. I'm a partner at BITKRAFT. We are a leading gaming fund. We invest in video games, interactive entertainment, content, infrastructure around it. Been around since 2016 and been investing in blockchain since 2021. So I lead the crypto efforts at BITKRAFT.
Andy Albertson. I'm a corporate lawyer at Fenwick, so normal law firm, but what we do that's different is we work with builders, creators to design complex systems. So gaming systems, DeFi systems, centralized, decentralized exchanges, roll up our sleeves and help people build and navigate the global regulatory and IP tax securities landscape.
And I'm Yoni Hagos. I'm with FEWTURE Co., and we're a talent and culture-based business that focuses on providing modular infrastructures and solutions that develop, protect, and create new IP. TJ, do you mind telling us what your company is doing as it relates to blockchain and IP and what you're focused on?
Yeah, so I think content and IP is everything in social video games. You obviously have the developers making content, but without the creators, you have nothing. So in order to really protect them, I think IP in the blockchain is needed, transparency is needed, and that's what we're doing with blockchain in our social video games.
Cool. Andy, as a corporate lawyer, what's your firm working on, and how are you guys focused on kind of protecting creators or developing IP?
Yeah, a lot of it depends on the model, right? So we work with everything from a system that's going to be a completely open source system. So thinking through open source licensing strategy, pulling apart the technology stack. Maybe there's an application layer that's going to have a different one. You could think about Yuga Labs as a model, right? You've got ApeCoin on one side that's an open ecosystem we're building. And then you've got the metaverse and gaming and everything else they're building on that side. So whether it's Arbitrum, that's an open source system, to more of like a heavy application layer model, the IP strategy is going to vary, distinctly between those two types of system designs.
Carlos, you guys are a fund, right? So from a investor's point of view, how are you guys looking at IP and blockchain?
We are active investors in content. So we invest, we're one of the more active investors both across Series C and Series A on games. And they may be AAA, more complex games, things that are simpler, mobile-friendly, or mid-core, casual user-friendly. And we think a lot about IP in all of these things because as TJ said, without IP, there's no game, right? People show up to engage with IP they love, and games are built on top of IP that people love. As it relates to blockchain, for us, the idea of allowing people to be entrepreneurial in games and giving digitally native property rights as part of digital worlds is what will form the basis of entrepreneurship and lead to a different vector of growth on top of games than what we can see today. And so we're eminently focused first on underwriting and picking great IP, and then on the infrastructure that allows people to flourish on top of that IP and have true entrepreneurship on top of it.
I think that's a great point. One of the things that we work on at FEWTURE Co. is really this notion of owning self, right? All the kind of pieces of yourself that are generally being distributed, whether it's your user patterns, your Spotify, or your Pandora, or your Uber, or your whatever it is, right? And so I think this notion of people owning every piece of themselves that is generally being monetized is really important. From a challenges standpoint, what challenges are you guys seeing and solutions that you guys are developing to kind of get around the challenges of blockchain, right? It's a new technology. The legal system is not developed fully yet, right? There's a lot of regulation issues. So from a challenges standpoint, what are you seeing, TJ?
Yeah, so I think even if your content is on the blockchain, there has to be standards that, it's recognized that you actually created that. So I see that as an issue. I think it could be on the blockchain, but then how do you enforce, licensing fees, royalty fees, etc.? That's still very complicated and needs to be figured out. But the things and pieces are there. I think different companies are working on cool solutions for this, but largely a lot of things are still missing, I would say.
So one of the things that, just to add on to what you were saying there, is these challenges are really opportunities, right? So people are scared by these opportunities, by these challenges because of the regulatory uncertainty. And so oftentimes it is that strategy that can give you an edge in the market. So for example, if you're pricing a company, right, most of these people up here are investors. If you're pricing a company, you can have those margins and that growth, and you're baking bagels, the valuation is going to be a number that's greatly superior to a company that's taking on industrial risk, strategic risk on a global basis. So when we're helping companies think through coordinating with investors and pricing these deals, you price that risk into the model, and what we're doing from an overall perspective is de-risking it that's right for that entrepreneur. And so these great investors that come in, they partner with the company, roll up the sleeves, come up with valuations and strategies to give that market opportunity in this gray area. So I think the really smart entrepreneurs and business teams that we support, they froth at the mouth at the gray area. They don't run from it, because it's that gray area that is a business opportunity that other people just run from because they don't have the courage, intestinal fortitude to do it, whether you're an entrepreneur or cutting a big check.
To me, I think the biggest challenge is mindset, right? I think 10, 15, 20, even 40, 50 years ago, IP has always been a singular asset, right? And I think with blockchain technology, we have to start thinking of IP as community assets, right? More entities will own IP, right? Users will own IP as well, right? Brands, creators, there'll be multiple layers of ownership, and I think that's a paradigm shift that we have to kind of get to.
Yeah, no, I think, right now the space traditionally is very fragmented based on jurisdiction, based on different rights. Now that you tokenize it, those rights are bundled. I can, license off T-shirts, I can license off display or different rights. So I think, once it's tokenized, there's a lot of ways that you can streamline that process and also make it cheaper for a lot of these entrepreneurs to monetize their creations.
As it relates to kind of public versus private blockchains, what are you guys seeing?
In general, public blockchains are more attractive for building ecosystems that are open to a lot of different people participating in them. A private blockchain, it's unclear how much innovation it brings forth versus just, doing any other type of technology that isn't a blockchain. So in general, private blockchains, I think, can be interesting stepping stones for people to build on top of it, or for a company to dip their toes into dealing with crypto. But I don't really think it's truly crypto unless there's a very easy bridge between that private blockchain and a public blockchain, or it is built on top of public blockchains to begin with. So in general, we're not really spending time on private blockchains, but I respect people who dip their toes in the water there first, and I hope that they get public eventually.
Yeah, and I'd add, I'm not interested in private blockchains, right? They're not interesting, and it might be an oversimplified heuristic, but I think of them as like the corporate networks. I'm not super interested in the Facebook network or the Twitter network or some of these other just the App Store for Apple, right? Those are corporate networks with a massive take rate. The future of the internet and what we're building as an industry is going to be these open system designs that democratize the builders and creators on this neutral infrastructure. And so when I hear the term private blockchain, again, maybe too simple, but I think of the App Store at Apple and charging a 30% take rate to just communicate and to sell your product into a market. That is, I think, the history. And where we're going in the future, I think all modern system designs are going to be built on, neutral infrastructure. Not even the cliche sort of credibly neutral infrastructure, legitimately neutral infrastructure that entrepreneurs can build on, transact peer-to-peer value on a global basis. And that is just clearly where we're going. There's going to be some bumps in the road, but that's the path that we're on.
Yeah, I think that's a good point. I think the fragmentation, right, private versus public, this jurisdictional fragmentation of blockchain leads to kind of the question of, what do you guys think about how blockchain can help us develop a global kind of standard, right? Or at least not 1,000 different standards, right? Of IP ownership, distribution of IP assets, whatever it is.
Yeah, right now, as you said, it's really fragmented. In the United States, you have the USPTO, and different countries, I'm sure you have different organizations. So if it's on the blockchain, it's transparent. Anyone can see it anywhere. So I think that's a really important part of putting IP rights on the blockchain for sure.
I mean, tech tends towards standards, the same way that the internet has coalesced around, W3 TC and sort of, what are those standards? It would make sense that if we have technology that is, because like a lot of people talk about like open source and like open source has been great to technology generally because people have figured out how to build on open source. Composability goes one step beyond that, right? It goes beyond just anyone can use this piece of tech into different pieces of tech can talk to it. The moment that you have globally distributed standards and composable standards, it makes it a lot easier for everyone to understand the ground rules of how to interface with the system. So for us, a lot of what interests us and really drove us to spend so much time at the intersection of crypto and games is this idea of incentivizing entrepreneurship. And I don't mean the entrepreneurship just of the startups we back, but of the players, of the people that are interacting with that game. For the last 100 years, basically for the first 100 years of, from early 1900s to late 1900s, there was a big ideological debate that basically argued for 100 years, and then eventually it was settled, that if you give people property rights and you give people commerce rights, economies grow, right? Like that was the core of the USA versus USSR, or capitalism versus socialism debate, is this idea that if people can do things in a system, then people are entrepreneurial and they go and they build and they start businesses and the economy grows. We are progressively a more digital society, and we should have digitally native property rights and commerce rights for that digital society. The more that we can accept that digital society is global instead of geographically bound, and the more that we can have standards that allow those people to connect and to know the ground rules and to really have tech-level composability, the more that we can have entrepreneurship of the people, of the individual, and like that's going to be a massive driving force of digital economies.
So I think some good news, bad news from my perspective on this one. I'm going to take it a slightly different direction. We still need to convince governments, sort of plurally, that you don't regulate protocols, you regulate businesses and applications running on top of protocols. And so we don't regulate SMTP. Right? That's not something that's going to be regulated. And so when we're talking about intellectual property rights that are running on something that should not be regulated, that is going to be a jurisdiction by jurisdiction, whether it's trademark or copyright in a local jurisdiction or patents or things like that. So will be for the time being, and from my perspective, for the foreseeable time being, a balkanized jurisdictional regime at that level, because just where we're at in the regulatory conversation globally, we're still trying to convince regulators that you can't regulate just open protocol systems. SMTP is a good example. Microsoft Outlook, Google, anyone else running through that, yes, maybe. But the underlying protocol, no. So in terms of a global IP system, maybe at some point. But right now, I think that will be balkanized on a jurisdiction by jurisdiction basis.
Yeah, I think also maybe some of the IP kind of global standards we're talking about could be less intense as an overall system. Maybe there could be focused on distribution, right? Or media, or content, or merch, or games, or some very specific kind of vertical that might be a little easier to manage than the overall system. But I agree with your general point, right? We're talking a lot about like blockchain and infrastructure stuff. Let's talk a little about creators and talent, right? Carlos, you're investing in these games, and I'm assuming you guys are working with talent and creators a lot and advocating for them. How are you guys using blockchain to kind of help them protect their own rights, their assets, their work, their ideas?
The typical creator that has been funded in the game space comes from the opposite end, where these game companies just own all of their assets. And players think that they own their assets because they paid $50 for a skin on Counter-Strike. But that's just really the terms of service allow you to pretend that you own this asset, but you don't really own this asset. And so for us, it hasn't really been about working with creators to let them own their things, but rather picking a subset of creators that wants their community to own part of the IP or perhaps the entire IP, although it tends to be the case that just owning the NFTs is far more practical than trying to have the entire game and the entire IP owned by the community. And so for us, it hasn't really been starting the battle of getting the creators to own it to begin with, but getting the creators to work with the community to allow the community to own some pieces of it. And like, what are the governance challenges, right? So to your earlier questions around like challenges, right? Two big challenges that we pay attention to are distribution and onboarding, right? Which we can sort of talk later about infrastructure, but then there's governance, and that's really attached to IP. If a bunch of people own for example, they have the license to individual NFTs, but they don't own the entire brand, how does governance for that work? If a bunch of people own the entire company, then how does the governance for that work? And just really defining ownership and then the governance setup that emerges from it to allow the different rights holders to work together is part of like what we do, right? So we spend time with studios trying to define how this digital society is going to work and how it's going to be governed and how we're going to make good decisions around it, but leveraging individual and player ownership versus just creator ownership.
That's cool. I think, at Future, we have a similar outlook, but we work with creators on an individual one-on-one basis, and then we'll go to a game, right, or some other kind of big property and help develop an offshoot of that original IP to co-create something new, right? It might be a merch project, it might be media, it might be a TV show, it might be animated series, it might be music, right? But that's what we're focused on, right? So we work with individual creators on a one-on-one basis to develop these systems and programs. TJ, did you want to say something?
Yeah, no, I mean, I think, consumers are really following creators these days. Whatever they're pushing to the public, they're buying. So I think it's really important to realize that. And recognize what the creators own and what they do not own. You're seeing now, in the United States with the writer's strike, in movies, they're, losing a lot of their power and they're not being recognized for their work. So I think, you're going to see more of that stuff happen. And yeah.
So this is a really complex question, right? There's sort of the first level answers, which I totally agree with about the intellectual property rights and how that fits into the stack. One of the more non-obvious things is how that IP decision implicates securities laws, all right? So for example, I'll unmask myself as a collectibles nerd. I've got a lot of baseball cards, things like that. If I own a baseball card, I got a Ken Griffey Jr. rookie, what do I own? I own a Ken Griffey Jr. rookie, that's it. I don't have any expectation from Topps or Don Russ or anybody else to what they're gonna do to create value for that. I can just enjoy the content in my baseball card. Think about that as an NFT, right? If all of a sudden Topps came out and said, look, Andy, you've got this Griffey rookie, we're going to build a really cool MLB game you're going to be able to enjoy for a long time. And our efforts to build that game is going to entitle you to IP rights in our broader ecosystem that we're building. Now, all of a sudden, that baseball card starts to look more and more like a security in the sense that I'm depending on Topps to go build out that game with something more than an entitlement, something more than I can just happen to engage in that ecosystem, but I have a legal right and an expectation that they're going to build value for me as a baseball card holder. So as we are thinking about complex system design, it's so much more than just this one narrow IP question. It is, what does that do for securities laws, different tax outcomes? How do we think about the Bank Secrecy Act and currency? Are there money laundering obligations? So how we make one IP decision is going to ripple through your entire system design. It's a really complicated question.
Yeah, I think that's right. But to your baseball card point, right? If you were the biggest YouTuber, that baseball collector and Topps came to you and they had this game, they would have to work with you, right? They would have to negotiate a special deal. They would have to give you a cut of something. You'd have decision-making power. You'd have a vote and say. Maybe you do an offshoot, T-shirt, hat, whatever it is, right? So I think the point I want to make is when you lean on talent and creators, you have that extra ounce of leverage where you can shift it a little bit. Maybe it's not a security now because now maybe I'm the head of marketing or I'm actually doing real work and I'm not just independently relying on their output. But
and what you got into right there is a really good DAO design system, right? So what we're then doing is taking something that could otherwise be a security, pushing the entrepreneurial efforts into the community, and that's when you're thinking about there's an infinite number of ways that we design DAOs, but that's just one really good attribute of how can you do it. From a business perspective, you're also engaging with a bottoms-up community, great business opportunity. How you feed all those pieces together will absolutely risk mitigate it from a securities perspective, and it can change the character of the IP license that you want to give those folks. What can they do with it, and how does that fit into our system? The other thing, too, that it does, which isn't a legal topic, but the empowering of creators is absolutely just the normative value statement, right thing to do, because it is the right thing to do, but it will also be a better business in the long term.
It's the tip of the spear, right? We go behind the creators and talent, and that opens the door. And now you're able to your earlier point, involve the community and users, and now distribute whatever the value of that asset is across a lot more people, right? What would you advise a Web3 company or startup who had some interest in creating some IP in this space? how would you advise them to start from kind of maybe a general strategy standpoint on how they should view IP rights and creators?
Again, it really depends on the model and what they're building. So the way that I like to think about it is, now I'm a corporate lawyer and a securities expert, so I see a nail, right? I'm a hammer that sees a nail. So, and this is going to be recorded, but we have to be very thoughtful about how we communicate what those IP rights and what we're building. So to say the quiet part out loud, you absolutely cannot say, we're going to go build a really sweet game and you're going to be able to use your NFT in that game forever and for all time. If you actually communicate that, that's going to be very bad for your security strategy. And so having a very rigorous and thoughtful communication strategy around whatever you're building is the most critical thing. So you can do a wide range. Our design space is enormous, and different companies, different projects, different entrepreneurs are going to make different decisions. But one of the common denominators is going to be understand where you're going, work backwards, and then build in a communication strategy that's going to look good when you get to that place that you're going. So how we communicate the value proposition of the native digital asset in the system is not always reflective of all of the private things on the roadmap that we're ultimately going to build and deliver to our community that's value over time. So,
TJ, you guys are developing new games all the time and new properties all the time. How are you guys kind of thinking of strategy from the top down?
Yeah, I mean, I think it's important to think about it early, even if you think there's no value in the IP you're creating. I think it's important to talk to a lawyer. I was fortunate to grow up with an IP attorney who, you know, as an entrepreneur, I was always building stuff, and she was like, oh, you should pay attention to that and get, you know, the copyright for that. And at the time, I was like, you know, I'll forget about that. I don't think it's that important. But I think as an entrepreneur and as, you know, people that we invest in as well, I would tell them to focus on that very early, because if it does blow up, it's too late, and oftentimes people take advantage of that, and at that point, it could be too late, perhaps, to protect it.
Yeah, like I think surely before something goes public, you want to make sure that you understand the structure, ownership structure, governance structure. At least you understand it as best as you can. But you know, like for a broader structuring point. So early in the bull market or through the bull market, everyone did SAF deals. So these simple agreement for future tokens. And what we've seen is a transition towards these equity plus token rounds. We have always been very equity dominant in our structure, in particular as early stage investors, because it was always difficult to, at the very early stage, before seeing the full game, before understanding how people are going to play this thing, before understanding what makes sense, to only index us to the token. And the reason why we have done equity plus token deals is because it allows us to have value capture throughout the entire possibility of the game. And then we can think about what this amazing game looks like, and we can design the game, design the system, basically grow that pie as big as we can grow it, and only after that add the economy and the ownership on top. For us, it's a concern when people try to define too much structure up front, because that's the tail wagging the dog. You know, you don't even know what you have yet, and you're just completely biased towards one form of ownership, or just the token, or all the NFTs are doing or this. And so it's a matter of balance. I think, you know, someone should go into building IP and building a game sort of having read the basics of, well, it could be structured this way. You know, you have that first conversation with a lawyer, you approach it with an open mind, and then you just go and build, and you try to build the best thing that you can build. And afterwards, you say, okay, here's this amazing thing that I have built. How will value be created in it? Based on this or that form of value creation, it should be structured in this or that way. Defining structure up front, to me, is, as I said, is tail wagging the dog.
I think at Future, what we like to do when we're advising new Web3 companies is really explain to them, and this may be a little bit more granular, that the budget they have in place to launch, the marketing, the events, all of that needs to be focused on talent and creators, right? It is shifting the mindset of, you know, traditional media spend and other kind of traditional marketing efforts, and really leaning on creators and giving them the full reign to run that entire kind of marketing, content, PR, whatever you want to call it, a part of the business. And that's a paradigm shift, right? Because a lot of these people come from traditional finance, traditional business.
Yeah, I mean, gaming has been this way now for a while. So Apex Legends, when it launched in, was it 17, 18? whatever it was, a handful of years ago. So no one knew that Apex Legends was coming out, and then one day all the top streamers were playing Apex Legends, and it went to like 300 million MAUs in the space of 2 weeks, and it's like the biggest game launch ever. And it was all creator-centric. And that's what we've seen with Twitch, and we saw it with YouTube, and sort of like progressively more and more the games have deeply relied on creators, and we have actively invested behind that thesis. There's a number of companies in our portfolio that are co-founded by strong YouTube creators or Twitch creators or whatever it may be, and so that paradigm shift, because in traditional games ecosystems now, App Store downloads, right? Like it's all the issues with privacy and deprecation of the identifiers, GDPR, like just all the privacy challenges that make it hard for you to tackle users. And so it's been getting harder and harder to acquire users in gaming at scale. And the strategy that keeps being the best strategy is just working with the best YouTubers, working with the best Twitch stars, and now some Kick stars as well. And so for us, that paradigm shift started, 5 years ago, and it's still the most interesting part of games distribution for us.
Yeah, no, I definitely agree, and that's one of our focuses as well. Is I think the return on investment in traditional advertising is lessening, and we're working with a lot of creators as well. One game that we're launching is called Hometopia, which is a interior design simulation game where people can build their dream home. So we're working with a lot of creators now where they're streaming all day as they're building their dream home, and we're getting a lot of people playing our game as a result of that. And working with a lot of micro-influencers. It doesn't have to be the top influencers out there. There's thousands of micro-influencers that make their living just streaming all day off of various games. And I think it's important, too, to reward them for that and the value that they're bringing to your game.
For sure. Carlos, do you mind talking about your guys' expansion in LATAM and India and what you guys are seeing in those developing markets?
Developing markets are interesting from a crypto adoption perspective because at the very base of them, they have more currency volatility. And so in general, people are more interested in trying out alternative means of value storage or value transaction. They're also interesting markets from a gaming perspective where gaming is growing very fast. If you think about device accessibility, so a lot of those markets are mobile dominant. We've had better and better mobile phones. We've also had India with more 4G connectivity after Geo sort of pushed into that market. Brazil, the same thing. And so for us, those are growing markets from both data and device perspective with a predisposition to like blockchain. And we've been investing actively in both of them. And so for us, it's certainly a place that we tend to spend more time. The challenge is just from a talent perspective, a lot of the core games talent today still exists in the US and then in Asia and Korea and China and some of Japan as well. And we really focus on backing the best games teams in the world to build games. And so that's probably why we haven't done as much, but we would certainly, we're always looking to do more.
I kind of forgot this question at the beginning, but TJ, what motivated you to get into blockchain?
I think it's, just rewarding the people that are adding value at the end of the day. You see Fortnite launching creator mode. You have a lot of creators building games within these, open platforms. And I think it's a transparency to where the value is coming from. Sure, the developers of the games themselves, built that, starting point. But at the end of the day, I think the creators, the streamers, the people creating these games are bringing the true value. And I think the transparency through the blockchain, creates value for them. And that's where, why I came into the business.
For me, because I've gotten scammed trying to sell items in World of Warcraft. And I think that every time we've had a great game that got connected to the internet, an economy has always emerged around it, whether it's World of Warcraft, Elden Ring, like just pick it, right? If there's a good game that you connected to the internet, there's a flow of value between time-rich, cash-poor users and time-poor, cash-rich users. And if we can bring that black market into a white market, I think that it will be larger. And so we want to bet on economic expansion through digitally native property rights for digital nations.
Satoshi. I mean, once I fully got my head around Bitcoin and the implications of it, I'll date myself for any other Seinfeld fans. There's the episode where George sees the red dot on the white sweater, and then once you see the red dot on the sweater, you can't unsee it. Once my head got around Bitcoin, the power and how, pardon my language, how fucked up our global financial system is and what it does to people, once you have that mental shift, you can't unsee it. and I made my life's work trying to advance Web3, Bitcoin, cryptocurrency. It just happened that I was a lawyer at the time when I became a Bitcoiner.
And for me, it really was, I started off in corporate finance as well as an attorney. And I've always been very passionate about entrepreneurship, especially for Black, brown, gay, trans, women, any underrepresented minorities, right? And this open space of blockchain is a new industry that has room for traditionally people that don't have room made for them, right? So that was super important for me. So our time's up, guys. We appreciate everybody. Thank you for your time.